affect the company's financial performance. We can help you manage your relationship with your workforce and the society in which you operate. It entails paying attention to social trends, labor practices, and even politics. The bottom line is, by guarding yourself against social issues, you minimize risk to reputation. Governance is a key component in a successful ESG journey. It factors in decision-making by directors, managers, shareholders, and stakeholders. Policy-making is the cornerstone of a company's practices. It underpins the values and the transparency of the organization as a whole. We like to think of ESG as transforming from the inside out. At PWC, we believe that sustainability is at the heart of business. Let's create meaningful change for our communities by bringing the best people and the smartest technology to work hand in hand with you to ensure that the business world and nature thrive. It's compelling food for thought for CEOs and shareholders. If there's one decision you make today, let it be that we talk ESG. Make it your plan A. It's time to step forward. Are you ready?
We're taught that 1 + 1 = 2. Simple, right? But today's world isn't simple. So, what happens if we look at it from a new angle? Could we make something greater? If we bring together human ingenuity, passion, and experience with the latest technology, we start to make something more. Something we can see in people's lives and feel in the world around them. Building trust for today and tomorrow. And that's the thing. We all know the math. But we need a new way to put it together. Which means we don't just find answers. We never stop looking for them. A passionate community of solvers, coming together in unexpected ways, creating new solutions for a new day. That's the new equation.
Hello everyone, my name is Aisha Bedwe Ibe. I want to welcome you to Tax Shorts. I'm the tax leader here at PWC in Ghana, and today I'm joined by my fellow tax partner, Abeku Jankwansa, who also leads our indirect tax practice. It's a pleasure to have you all here today. And today we'll be discussing the recently passed tax exemptions bill. And one of the things that I'm going to raise with you, Abeku, is that we've been waiting quite a while to have this bill, so it's good that it's finally arrived. It's great to have so much clarity in one document. What are your thoughts on this?
Aisha, I actually share the same thoughts with you. I mean, as business people, we want certainty. I want to be very clear in my mind what it takes to do business. So I was actually very excited about that. One of the parts that actually excites me is if the finance minister goes to parliament to submit an exemptions request and parliament responds, he needs to get back to me within 4 weeks. And I think it's a great idea. So I agree so much with the issue around certainty.
Okay, good. I also noticed when I was going through the bill that there are clear guidelines around providing services to government agencies and how to charge the taxes, because as you and I know, having worked on so many clients over the years, there's always an issue there about whether to charge VAT and indirect other taxes to the government. If so, why not, and whether that will be accounted for and how so. So it's good that it's clear in this bill that taxpayers must charge the government and the government must pay. What do you think about that?
Then Aisha, this is actually exciting. Exciting because we already have provisions in our tax law that is responsible for tax administration in general. And that is what people call the Revenue Administration Act, Act 915. This law has been in existence since 2016, but in terms of implementation, since January 2017.
Okay.
Now, the interesting thing about that is that even the ministry, department, and agencies know that they cannot go and have conversations with people and give them exemptions without the Minister of Finance consenting and without Parliament actually backing the granting of that exemption. Now, what we can see in the law is that if I'm a private business person doing something for government and it relates to a commercial project of government, then I must charge VAT unless the VAT law says I should not charge. Now, apart from that, the other interesting thing is that if I fail to charge, the Revenue Authority, in this case the Ghana Revenue Authority, would recover it from me. And in addition to recovering it from me, there are sanctions in terms of penalties that apply. And in addition to that, I actually run a risk not having it deductible for income tax purposes. So I think largely this bill has given a lot more clarity on how things should be done. And when the president does not object by way of assent, and it's made public by way of gazetting, then we are all good to go.
Great. I see also that donor funds and grants have also been taken care of as well. So that's good to know. The strategic investor for the GIPC, something that we've heard mentioned over the years. You and I have both had to sit in meetings with the GRA and GIPC around this. So once again, there's clarity in this document around that. What are the procedures for following that?
All right. One is what I choose to call government public-led exemption requests, and the other is what I call the private special exemptions requests. The GIPC, in order to lead the conversations around exemption, would have to make sure that one, whichever area an investor is applying for exemptions for sits within what we call the priority sectors that have been approved by cabinet.
Sabeku, maybe finally for all the people who are tuning in today, for anybody who wants to approach the minister to go through the exemptions process, investors, local companies, anybody, what is the procedure?
All right. So remember I talked about what I call the private-led, the public-led.
Yes.
But what I find common to both is that whichever approach ones take, the Minister of Finance must get involved at a particular point in time.
Okay.
The Minister of Finance must approach Cabinet. Cabinet can actually refuse a request from the Minister of Finance. And if that is done, the right thing to do is to go back to the one who made a request to say to say the Cabinet does not approve of this.
Okay.
Thereafter, if the Cabinet approves of it, we then go to Parliament to get the approval done. What does this mean, Aisha? This means that going forward, when government now brings up concerns around our exemptions are too much, then we need to ask, is it a case that our parliamentarians are the one just approving this? Is it a case that cabinet members are not reviewing it properly? Or is it a case that the Minister of Finance himself did not look through the exemption properly before doing that? So now we have a proper chain. And the default members that will be involved, whether it's public-led, private-led, in this case GIPC-led, would be the Minister, Cabinet, and Parliament are all involved in the exemption conversation. And one thing I would probably want to add is the transition provisions around making sure that the exemption is really, really valid.
Very key.
So what the bill also provides, hopefully the President would assent to because it becomes law. It says that within 6 months of this act, I will call it an act by then, being in force, approach the minister, enjoy that. This does not apply to those who have some provisions could be locational incentives and the Income Tax Act. It doesn't apply to you. You would continue to enjoy it as normal. If you provide items for which you should enjoy some reliefs, it doesn't apply to you. So for example, if I am an AGI member and I can do upfront relief, these are not the things I'm talking about because it's enshrined in the VAT Act.
Okay, great.
But for those that are not in the VAT Act, the Income Tax Act, the Excise Duty Act and certain portions of the Customs Act, you are required, if you want to make sure you don't get into dispute with the GRA, within 6 months, approach the minister and make sure that your exemptions are not in dispute.
Sabiku, would that apply to holders of special agreements, for example, in the mining sector and oil and gas sector, construction and so on?
All right, so actually that's a good question.
Yeah.
The law says that for those ones that have already been approved, they would not be repealed on grounds of the Exemptions Act.
Okay.
But one thing I would say is that if you are not too sure, to avoid disputes with the GRA, please approach and make sure that these are not in dispute.
Okay, okay, great. Abeku, thank you so much for having this conversation with me. It's been really insightful, and I'm sure we'll be engaging in further conversations. And to everybody, thank you so much for joining us here on Tax Shorts.
I think so.
Once again, my name is Aisha Bedwe Ibe. I'm the tax leader here at PWC Ghana. I was joined by my fellow tax partner, Beku Jankwansa, who leads our indirect tax practice, and we look forward to seeing you in future episodes. Thank you, and God bless.
I hope this is not live. Whatever is happening here is not live.
Hello, I'm Dion Shango, PWC Africa CEO. PWC Africa has a broad geographical reach on the continent, encompassing the vibrant growth hubs of the east, west, and southern corners of Africa. As a business operating on the African continent, we have 450 partners in 32 countries and 10,000 employees, making us the largest provider of professional services in Africa. I'm excited to announce that this year, we are launching our first ever Africa Annual Review, which focuses on our impact, value creation, strategy, and related performance across Africa for the financial year that started on the 1st of July 2021 and ended on the 30th of June 2022. The report demonstrates significant progress on our journey towards reimagining Africa together in a changing world. Disruption has become the new normal, and we understand that our clients need imaginative solutions to face this disruption and turn it into an opportunity. Competition in business has never been more intense, and societal expectations of business have never been greater. So businesses will need to change faster and more thoroughly if they want to succeed in the face of this disruption. At PwC, we are focused on investing in areas that will support our clients to transform their businesses so that they can build trust with and deliver sustained outcomes for their stakeholders. This is underpinned by our global strategy, the New Equation, which addresses two fundamental and interconnected needs every organization faces: the need to build trust across a broader range of stakeholders and the need to deliver sustained outcomes. Our 2022 Africa Annual Review demonstrates how we bring the New Equation to life for our clients, our people, and the communities in which we operate. It also details focus areas such as value creation, international development, cybersecurity, technology-enabled transformation, and ESG, which will help our clients to navigate a much more complex environment. Our unique combination of capabilities, matched with significant investment and our commitment to quality, enables us to help our clients unlock value for their stakeholders and broader society. Working alongside our clients to solve these important problems is our core purpose at PwC. I'm also so proud of our diverse community of solvers who continue to support our purpose of building trust in society and solving important problems. Digital transformation remains a key strategic area for PwC. We have continued our digital upskilling journey, offering all our people intermediate level training in data analytics, visualization, and robotic process automation. The report also covers our transformation journey. This is evident in the composition of our executive structures within the firm and the impact we've made with women in business. Earlier this year, we also took a historical step forward as Anastasia Tsesane was elected as our first female PWC Africa Governance Board Chairman. We hope that this report takes you on a journey to understanding how we create value by fulfilling our purpose, as it all adds up to the new equation.
This is us. One world, one home, one chance. There is no plan B. Because there is no planet B. We can't simply press Ctrl-Alt-Delete, but we can reboot our corporate thinking and refresh our attitude towards the race for net zero by reimagining a sustainable tomorrow. It begins with an environmental, social, and governance model that will deliver a sustainable business advantage and measurable value. The question is, how can organizations deliver sustainable outcomes through effective ESG strategies? It starts with a conversation with us. We can shine a light on your company's impact on the environment. We'll discuss the use of natural resources, energy needs, reduction of waste, even policies on business travel. At PwC, we've mapped out more than 1,400 environmental tax incentives across 88 countries and regions around the world. ESG brings the very real dangers of climate risk to the table, but with solutions that can be implemented today. All it takes is commitment. The social factors within an organization will affect the company's financial performance. We can help you manage your relationship with your workforce and the society in which you operate. It entails paying attention to social trends, labor practices, and even politics. The bottom line is, by guarding yourself against social issues, you minimize risk to reputation. Governance is a key component in a successful ESG journey. It factors in decision-making by directors, managers, shareholders, and stakeholders. Policy making is the cornerstone of a company's practices. It underpins the values and the transparency of the organization as a whole. We like to think of ESG as transforming from the inside out. At PwC, we believe that sustainability is at the heart of business. Let's create meaningful change for our communities by bringing the best people and the smartest technology to work hand in hand with you to ensure that the business world and nature thrive. It's compelling food for thought for CEOs and shareholders. If there's one decision you make today, let it be that we talk ESG. Make it your plan A. It's time to step forward. Are you ready?
Hello, good morning, ladies and gentlemen, and welcome to the PWC 2023 Post-Budget Forum. As some of you may be aware, every budget season, we make it a point to contribute to pre-budget discussions, which are a reflection of the observations from engagements we have with our enterprises and the broader society. And we make it a point to also listen very attentively to the budget and prepare summaries that share further thoughts. And we hold forums like this to have deeper deliberations about the budget. We do all of these as part of our purpose, that is to build trust in society and solve important problems. My name is Jijeje Fiajo. You can call me Gij, that makes life easy. I work here in PWC as an associate director. I have responsibility for tax reporting and strategy for taxpayers and tax administration effectiveness for tax authorities. I'll be moderating the session, and I'm believing that the next 2 hours we are going to spend here will be beneficial to both us and yourselves as well. Before I just get into, it's just the next door. That will be to your right. When you're on this side, it will be the next door. That will be to your left. So we are here at the PWC Tower, A4 Rangoon Lane in Cantonment, and we're also joined by a good number of people. We are live on Facebook at PWC Ghana and at Daily Graphic Ghana. We're also streaming on YouTube, PWC Africa. Our media partners, Graphic Business, Joy Business. We appreciate that you are present here and that our online viewers are also joining us. We will announce in due course how you can post your questions as we continue. So, to give the welcome address, I'd like to introduce one of our senior partners. We know him internally to wear many hats, but what we know him both internally and externally to be is our country's senior partner. Ladies and gentlemen, help me welcome Vish Ashagbo to give us this welcome address.
Good morning, ladies and gentlemen, invited guests, those joining us online. You're most welcome to this budget forum. For those of you who have been at some of these forums before, I guess you know the purpose of what was read last week, because obviously it has implications for all of us as business, as individuals, as citizens. And it's basically a two-way street in the sense that government has set out its policy direction, but it needs us as business and private citizens to do our part to make it work. I'm not going to say too much today. Fortunately, because I have Gij today, I'm relieved of a lot of the work in terms of moderation, so I can sit, listen, and contribute as appropriate. But just a word of special welcome to Honorable Deputy Minister for Finance, Honorable Abnao Sayasari. Thank you very much for joining us this morning. We appreciate your presence. She obviously is representing the Minister and the Ministry of Finance to tell us some of the thinking that went into the budget. That's on the one hand. On the other hand, she's here to also listen and to take feedback, thoughts, advice, and you know, take it back to the policymakers and see how that can be weaved into implementation and maybe new policy going forward. So, Honorable Deputy Minister, thank you very much. We do have other panel members who will be introduced in due course. For now, all I'll say is welcome once again. Do feel free to participate fully. The purpose of us being here is to exchange ideas, exchange thoughts, so constructive feedback, but other than that, no holds barred. Thank you very much, and we look forward to a good session. Gij, back to you.
Vish. So we are moving right along to unite us, so to speak, by giving an overview of the budget. I'd like us to all welcome Abeku Jankwansa. Abeku is one of the partners here in the firm. He focuses on tax services to taxpayers and leads the firm's tax policy discussions and initiatives. Abeku is also the business school leader, and I believe for those who know him, that resonates with his inspiration to teach. Ladies and gentlemen, Abeku Chankwansa.
Thank you very much. We'll look at how we performed and how we expect to perform going into 2023 and beyond. A lot of us that would participate in this conversation will be quite concerned about the tax measures because government essentially will be coming back to us to pay those taxes. And then largely we do have some concluding remarks. So performance and outlook. We all recall that when the Honorable Minister of Finance presented the budget to Parliament last week, Thursday, he emphasized in paragraph 19 that, Mr. Speaker, this budget is therefore anchored on a 7-point agenda aimed at restoring macroeconomic stability and accelerating our post-transformation as articulated in the post-COVID-19 program. In other words, as far as this budget is concerned, our feedback, recommendation will also be based on this 7-point agenda. So aggressively mobilize revenue, streamline expenditure, boost productive capacity, promote and diversify exports, protect the vulnerable, amongst others. So how did we perform last year or in 2022, and what do we expect to do going into the future? So including oil, we expect, or we had grown by about 4.0% of GDP. We expect that going into 2023, our growth inclusive of oil should be about 2.8. So if you are drawing your budget, ignoring inflation, and you are placing it at about 10%, then the question we need to ask is that what magical things are you going to do to go far in excess of what the economy expects to do? End of period inflation for next year would hover around 20%. Have you considered this in your cost projections, for example, amongst others? So this is just a quick summary of what the finance minister presented last week. The structure of our economy will fundamentally not change. The distribution of our agric, industry, services remains largely the same. Our growth over the period, as you can see, would tend to go down in 2023. This is how we expect to perform on our budget deficit. So we can see the trend from 2020 right up to 2023. We can also see how revenue would perform. So a lot of our revenue would come from taxes as compared to the others. And then this is how expenditure would also fare. And for those of you who know me, and as Gij introduced, I'm a tax partner. I get a lot more comfortable with the tax measures. So what I just did was just to quickly recap what the finance minister said, and then we can have a more insightful tax conversation. So, what are we expected to remind ourselves about? We're expected to remind ourselves that going into 2023, as a country, we expect to raise about 144 billion. This compares to about 100 billion of what we expected to do in 2022. We expect to spend about 205 billion. Our plan for 2020 is that we should hover around 140 billion. So the initial conversation that we need to have is that what are those drivers? Why are we going to move all the way from about 140 to over 200 billion going into 2023? Our budget deficit is expected to rise from about 44 billion to about 62 billion. So going into 2023, a year that we may be under an IMF program, our deficit would be rising. So we need to check that. Coming back to revenue and grants, where we expect to raise about 144 billion. Tax revenue is expected to give us about 112 billion. 112 billion means that about 78% of our revenues and grants would come from taxes. So the business community obviously needs to be a bit concerned that if government is going to rely on taxes a lot more to finance that expenditure, then we expect our colleagues and friends at the revenue to be a little bit more aggressive in ensuring that this budget is met. So in brief, government is expecting to raise about 50% more tax revenues compared to where we expect to end in 2022. What this therefore means to us is that go back, look at your records, ensure that you are as tax compliant as you can be getting into 2023, because the revenue would be coming after us. Some performance from 2017 to 2023, and it's quite important that we have this conversation because we need to know whether the performance projection of about 50% can be achieved or not. So from 2017, we can see that we collected tax revenue of about 32 billion, and we've continued all the way up to what we expect to do of 112 billion in 2023. A bit of reminders here, and this would inform some of the conversations that we are going to have. The Ministry of Finance, staff of the Ministry of Finance, and some other bodies issued a document I would encourage everyone to read a couple of years ago. That document is titled A Survey of the Ghanaian Tax System. That document tells us how taxes have performed over the period and what the impact has on taxes. So this is just a quick reminder of the revenue trend. If you don't remember anything, let's remember that GRA would expect to raise about 50% more revenues over 2022 performance, and we are expected to pay that. To continue, this is a slide that we've often brought to the attention of government, that it looks like when we look at the various tax policies, persons are actually encouraged to remain in the informal sector than to come into the formal sector. And why we are saying this is that if you look at the appendices to the budget, from 2000 right up to 2021, this is a graph which shows you how, so this is a graph which shows you, you can clearly see that those who are self-employed in terms of direct taxes pay less than $1 billion, while those who are engaged in the formal sector on PAYE alone pay over 10 billion. Going into 2022, by the close of this year, government projects that we should have done about 12 billion compared to just about 700 billion from the self-employed direct taxes. Going into 2023, it actually gets, 2022, government says that the PAYE taxes should be about 17 times people in the informal sector pay in terms of direct taxes, or self-employed pay in terms of indirect taxes. Going into 2023, what we expected was that that ratio would improve, but it appears to get worse. And the question that we are asking is that, is this an incentive for people to actually remain in the informal sector? Because the more you proceed and you become formalized, government tends probably to focus on you in raising the revenue. So what have I done up to this point? Everything I've done up to this point is just a recap of what is going to inform our conversation on taxes. Once again, let's remind ourselves of the paragraph 19 that the finance minister shared in Parliament last week. And let's add to that paragraph, paragraph 980, which reads, Mr. Speaker, let us not squander the opportunity to turn around and reset our economy and create a bright medium term for our country and its people. So what the minister is saying is that it's all about us. This is not a time to, this is the time to rebuild, not to destroy and tear down. Let us work together for our collective benefit, as it said in Nehemiah 2, verse 8. The point that we are essentially making here is that we hope that today's session would actually inform the debate in Parliament, and would actually inform passage of some of the laws. And probably if there are certain things that government should reconsider, government will reconsider them, because the minister emphasized that it's all about us. So having said that, and having responded to the president's requests, we hope that the process would truly be consultative. So in brief, what are the tax measures that occurred or that the minister shared with us as far as 2023 is concerned? The good thing is that our special guest for today is also a chartered accountant, and as business people, we cannot do an offshoot of that process. So let's remember that. So what is government saying that they intend to do in 2023? Let us remember that the proposals that we're going to make are being made in an economy where we currently have a double-digit interest rate. That's the first thing. Let us environment, high inflationary environment, and let us add to it the issues that we have on currency. So the first thing government is saying is that going into 2023, I would deny you an ability to deduct forex losses unless those forex losses are realized. What does this really mean? An example, I import things to sell in Ghana. I'm able to negotiate a credit line. The items I imported into Ghana is worth $1 million. The guy says, pay me in 2 months. Government says that even though the depreciation of the cedi is not in the direction that we want, if I don't pay in 2 months, and the 1 million cedis, which was supposedly $1 million, which was 1 million cedis, becomes 1 million to 1.5. As long as I've not settled the liability, that 500 would add up to my cost of doing business. What does this mean? It means that for us as business people, we should expect our tax payable to be higher than your effective tax rate. The question is, much as we understand the need for revenue, do we really want to pass a law that would deny us an opportunity to have forex losses deducted until the point where it is realized? These are questions that we need to have a frank conversation about. Closely added to that is the issue of the benchmark discount policy. Our view has been clear right from 2019. And I think we were very clear when EMT announced that policy. We felt it did not align with the laws of the land, but hey, it was pronounced and it was done. We are in 2022 to use benchmarks as a means of valuation rather than relying on transaction values. So about a couple of weeks ago, there was a customs official on Joy FM who was discussing this. And our reference values are risk management tools and not the first point. What is our commentary here? Our commentary here is that government over time should try as much as possible, progressively, encourage customs to allow people to use transaction values. If they are wrongly declared, please, there are sanctions in the law to do that. So I can appreciate why they will be used. It's easier for customs, but it's costing a lot of stuff. The other question that you have is that, are we even sure that that database is current enough? Are we sure that when I used to bring tiles in from Italy, and now I bring tiles in from Barbados, the values in the system are recognizing the fact that I'm bringing in things from Barbados? Those are questions that we need to have. So the first impact that we need to have on our businesses is the fact that these two measures, much as we endorse the issue around discount policy removal, we should be careful with the forex exchange loss realization that we are proposing and ask ourselves whether this is the right time. Closely associated with the issue on customs and for the business community is that typically every 5 years we update our harmonized code. The 2022 harmonized code has been dealt with, and we understand from the minister's presentation that very soon approvals would come. That essentially means that your tariffs could change depending on how products are classified.
So speak to your consultant. Let's look at which tariffs are going to change so that you can plan accordingly. Having dealt with this issue, and while we are still crying over them, government is proposing a 2.5 percentage point increase in the standard VAT rate. So what that essentially means is that while I'm struggling to deal with my cost side, government is proposing to deny me a claim because it's not been realized. On the other side is the issue that the price that you charge, you are going to have to adjust it so that government can get 15%. What that means to businesses is that it's either that extra cost is passed on, or we accommodate it and reduce the profit on which we pay corporate tax. So we are not saying that government should not go ahead. We are saying we should proceed cautiously. And closely linked with this is the call for government to do the following. One, our VAT system is becoming a laughingstock VAT system. It does not comply with any rules that is respectable on VAT. We are therefore calling on government that if you want to bring in that 2.5 extra, you can bring it, but please, let the VAT system work. Allow businesses to make a claim of the levies, because the levy denial is causing a lot of harm. Businesses, I'm very much aware, some have closed down just because the levies are not working. It's creating instances for aggressive tax planning, which should not actually be the case. So bringing your 2.5, that's okay, but please allow the deduction of the levies. In other words, consolidate it right back into VAT and let it work as a proper VAT system. Having said that, remember I talked about the post-COVID-19 program. Why do we have a COVID recovery levy during a post-COVID-19 program? Our view is that it means the COVID levy must die. Otherwise, it would be inconsistent with the whole idea of a post-COVID-19 levy. In brief, go back, have a standard VAT rate of 20%, allow a full deduction, and the levies should be long gone. Having said that, the issue around thresholds, our proposal is that yes, the 200,000 have remained on our status book since 2016. It's been 6 years. How has the city even performed? What was the equivalent dollar rate at that time, and what is it now? Our proposal, obviously, is that the 200,000, which serves as the mandatory registration threshold, is quite low. We are therefore proposing that at least government should double that. Our preference would be nothing below 480,000 as a registration point. And then, for you to actually operate a standard VAT system, we are proposing that government should go beyond 1.2 million annually. Why are we saying that? We've seen government from 2017 tends to like levies. What does levies do? It denies you input deductibility claim. So what we are saying in here is that let's give you range for you to do that. But beyond that, let's operate VAT as VAT should operate. Closely linked to the between the 480,000 that we are proposing and 1.2 million, we are asking government that no longer should it be the case that it is reserved to retailers. Truth of the matter is that the definition of retailers is a very difficult concept. So I am in Makola. The lady in front of my shop sells my items. She comes to buy it and sells it in front of the shop. Is she a retailer? Maybe. I that I'm in the shop that people can also come and buy from me. Am I a retailer? Am I a wholesaler? It creates complications that we all need to avoid. And we have set times without number that we had a good law, which specifically is the Act 810, which ignored these definitional issues around retailers. So our appeal is that government would go back and look at that law and make the relevant modification. VAT invoicing electronically, it's a good measure. Business community, let's get prepared. The law has been passed. The law says we have 1 year from the day it entered into force, or even if I use the GRS implementation date of 1st October, it means that as business people, we must get ready to get onto the e-invoicing by the end of September next year. My encouragement to you is that reach out to the revenue even if they've not reached out to you. Because for some of the clients that we are actually assisting, it's quite a lengthy process. So the least that you can do is to find yourself where the palaces, the China malls found themselves. So please initiate conversation with the Revenue Authority and get those things done. Whilst we're thinking about all these things, government says, I'm going to bring a top band 35% tax. What does this mean? It means that we should work very hard and commit over a third of our income to the government of Ghana. Truth of the matter is that for those that you may target and ask them to pay over a third of their income to the government of Ghana, these are likely going to be the middle to top income earners. They have control over their balance sheets. What is going to happen is that certain increment that they would have probably given to staff may be restricted because you are going to ask them to pay additional taxes. And as I said from the beginning, businesses are done because primarily we are looking for profit. The rest of the things that we do is an offshoot of that. So we'll ask government that in as much as you want to revise the vehicle benefit, a good idea, let us proceed cautiously with this 35%, especially when we are now going to have a growth and stabilization levy. A growth and stabilization levy would be a levy of 5%, 2.5%, or 1% of production, depending on where you find yourself. So we are asking government, if you want to burden share and go for growth and stabilization levy and still hit a 35%, what you are effectively doing is that the cost to businesses would be about 10% because the people you would attack control the balance sheet. So this is an appeal that we are making to government. Government is giving a waiver on those that do qualify in Tier 3 withdrawal. Good news, but we don't even want people to lose their jobs to get to that stage of taking the withdrawal without taxes. So please help business save so that we do not get to that level. Continuing is the fact that taxes on capital gains would be modified on assets and liabilities. And closely linked to that is the issue of withholding tax. I'm not too sure how government would intend to legislate a withholding tax on the realization of liabilities. I would encourage a lot of consultation to ensure that we do not have challenges. Closely linked to this are the following 4 points. 1, a minimum chargeable income. Well, a good idea. At least it takes away the fight from GRA that you have been working so many years and you've not been paying any taxes. So now there's a minimum chargeable income. But that is why we are saying that this plus the GSL plus the 35% is way too much. So let us proceed cautiously with that. Government says, I want to unitize the ability to carry forward tax losses. We don't know whether this would be positive or negative, because currently in Ghana, a general company or a general entity, a general business can carry forward losses for 3 years. Those in specialized industries can carry forward losses for 5 years. There was a rationale to those discrimination. So for example, if I'm in the extractive sector, I obviously need a longer period to recover my losses than I am in the others. Our appeal to government is, if you want to unitize, we understand the need for revenue. Instead of coming down to 3, please, let's go up to 5. Closely linked to that is the issue around the vehicle income tax. We have made this appeal several times. I would encourage you all to pick the LI 2244, turn to the schedule, and you realize that the truck mate who fought with you over 10 cedis, a whole quarter may be paying just about 40 cedis. So just 4 passengers in that car from Medina to Agbogbloshi pays his whole taxes for the whole quarter. How do we do this to ourselves as a people? And remember the call that, do we really want to get people to formalize? We're asking government, can we begin indexing these tables every year, adjusted by maybe the prior year inflation? Then we know that even if you stay in the informal sector, you may not have that advantage. Having said this, is the issue of freezes and exemption. And we are still running our heads around what it means to freeze new waivers or new taxes for foreign companies. Are we ready as a country to pay some commercial rates? Those are the questions we need to answer in order to do this. Our parliamentarians, I think, should not even have allowed the minister to speak on this, because we already have the Exemptions Act. And the Exemptions Act lets us know what we're going to do going forward. The budget says there are going to be guidelines. I would encourage that as soon as it's passed, we look for it and then comply accordingly. For those of you listening and who operate in the Jubilee field, you have been specially identified. Government says that you may owe them additional oil entitlement, which basically says that if your rate of return actual exceeds your expected, we'll come back for an additional oil. What are we saying? Get your consultants, review, and ensure that you don't have AOE issues before the GRA begin knocking on your door. If the GRA knocks on your door, the minister did not talk about waiver of penalty and interest going into 2023. What it means is that our hands get back into the mouth of the GRA, and the Commissioner General has a discretion to say what I'm going to give you a waiver of interest or penalties. So businesses, please. PWA was not mentioned as going to be extended. We just have the month of December to go. Please self-review your affairs, and any interests and penalties that you have, boldly write to the commissioners and tell them that the parliamentarians of this country passed the law to say that if I self-declare, you waive. So after this year, those liabilities, now you have to virtually go and kneel down and beg the revenue, and I'm sure you don't it. So for the gaming industry, government says the VAT complications, well, we think it's a good idea. Government says, I signed ECOWAS protocols. I've signed ECOWAS protocols on tobacco, for example. I need to comply. Good idea. Government, please comply. Lastly, government says, withholding taxes on winnings, at least give me a token. But in that stead, we want to remind government, a couple of years ago, even though and win on lotteries. So to been talked about, government says, I'm going to drop from 1.5 to 1%, or is it a mobile money daily threshold? There are two different daily thresholds. We need clarity on this and know what to do on this place. Lastly, government says, I'm going to expand the various services or transactions for which tax clearance certificates are required. So if you have a land and you want to register, you need a tax clearance certificate. If you're a professional and the laws are working, you need a tax clearance certificate to be able to renew your membership, amongst others. Government says, I'm going to expand it. Expand it into what? We're not too sure yet. Because remember that certain cases have gone to court when the court have actually threw out the whole requirement to have a tin before you can come to the court. So we're not sure about some of these things. So to quickly wrap up, what are we proposing to government? Please, let's reform the VAT. The VAT is simply not working. We can have a standard accumulative VAT rate of 20% and make a claim for it totally. Government have talked about the Realignment Act, and I wish somebody had really called the attention of government that the levies and things that you are doing is not in compliance with the Earmarking Fund and Realignment Act. And why am I saying this? That act essentially says that when we earmark funds, government can move the funds to certain places. So what is the need to have all these separate levies and christen them? It just does not work. So please let us go back and comply with the spirit of the Realignment Act. Benchmark values, have spoken about it. We are the seat of the Africa Continental Free Trade Area. We must be seen to comply with the custom laws. The WTO, the WCO rules are all there. And what we are currently doing may be at variance with that. Let's consider the indexation we've talked about. Let's encourage formalization. The more you keep coming to the formal sector, before you realize, the formal guys will become informal, because there's a good tax planning opportunity just by remaining in the informal sector. They can close the shops and get queen mothers and regional ministers to beg them. So we must be careful to reduce the number of people who get into that area. Let's begin to consider the whole idea of revising the laws. You could see from that single slide that there's too many changes. If you are not careful, the laws will not speak to each other, and we may mess up our laws before the start of 2023. In that respect, we last plea. Some people have been kneeling down on radio, TV, and all those stuff. We would not kneel down. We are saying that it's 2 years too long for this board not to be set up. Government, clearly your revenues are not coming in because we are having lengthy fights with the GRA on the field. You are not there with us. You do not gain transparency by allowing us to do that. Please set up the Independent Tax Appeals Board. In our view, it is one of the best tax bills that we've had passed into law since 2017. And just to give you history, in the then our own President Kufuor said that he was going to set up a tax tribunal. That didn't work. We've come all the way down to pass a law in 2020. And I keep saying that the Ministry of Finance may intentionally have decided not to set up the board for us. I'm not too sure why 2 years down the line, we do not have this board. The board's composition is the best of composition that you can get. Political influence, in my mind, is limited on that board. If the ministry is struggling to get persons to serve on that board, our appeal to them is that you can come and talk to us. We can assist with the recruitment, give you a number of people to select from, and let's stop the case whereby government do not get revenue, because based on the current laws, we spend years and years fighting liabilities on the field when the board could have helped reduce the time. So at this stage, I would read this, and this would be found in our in our budget digest, which will be released soon. We believe that restoring and sustaining macroeconomic stability and resilience through inclusive growth and value addition is attainable, we believe, subject to rigorous implementation. Full slide of measures we'll be watching to see the extent to which they will be implemented. The policy direction in the budget is clear. We understand where government is going on with all this. Even though we wish that we had a bit more details in the budget, because that would have informed the numbers. Policy direction alone is not enough, but we think it's a good start. So we look forward to the specifics that will guide the effective implementation. So even as government provides those specifics, we here at PWC recognize, and of course with our clients, we recognize that we have to play our part by constructively working with government and other stakeholders. And we are calling on others who may not be our clients, who may not be in PWC, to also join this effort to steer this beloved country of Ghana through the difficult times that we are in. So on this note, I will hand over to Gij and remind us that there are so many other documents that you can read to get a lot of things from. So Gij, thank you very much, and apologies for overrunning your time.
Thank you very much, Abeku. I was asked whether I should give you additional time, and I said yes, give it to him. He needs it. And obviously he needs it because it's a mixture not of the overview and also the proposals all at the same time. Thank you very much for that. So just to quickly announce that we are live on Facebook at PWC Ghana and at Business and Joy Business. So we've heard, I would say largely from the enterprise side of things, but at least we got an indication of where, and we are grateful to Abeku for that. We'll now take the time to hear, I would say largely from the government side, and I would like to introduce the Honorable Deputy Minister at the Ministry of Finance in charge of Revenue. Let me just read some of the things we know about her. I think Abeku put it out there that it appears